3 years ago, in early 2023, I started building a spreadsheet, and I had no idea what it would become. What began as a simple tracker slowly evolved into my PIIverse Master Spreadsheet, the command center behind every move I make in my passive income portfolio. And over the years, this spreadsheet has vastly grown with me and my strategy. It's become smarter, deeper, and more powerful. And honestly, I rely on it more today than ever before. And now that we're in 2026, it's time. Time for a full, updated walkthrough of my engine that helps me execute my entire income strategy. I'm going to open it up, show you how it works, reveal my real holdings inside it, and walk you through the live metrics I use to reinvest, rebalance, and stay disciplined, no matter what the markets throw at me. So, let's jump into my PIIverse spreadsheet. Hello everybody, my name's Perry, and welcome to the PIIverse. Back on the horse again of creating videos after, like I said, over a 2-week hiatus. I'm looking a little browner here, yeah, maybe. But anyways, I was down in Mexico for a couple of weeks, and of course I got no videos. I know a lot of people are wondering what happened to me, but I've already explained that message before. And yeah, I'm back now, and I'm start creating some videos. I started already earlier this week by releasing my January month-end portfolio review. For you, just look at it. It's at the top of my videos on my channel. So if you haven't seen it, go and look at it. I'll make a click up and a link here. So in case you want to see it, it's right there. But anyways, so I started wondering what kind of videos to create to get back on the horse. I know there's a lot of little ones. I have some in mind on this, but there's one that I have really neglected because honestly, with my reliance and my usage of Snowball Analytics a lot to do my presentations on, I really have neglected talking much about my main source of command and control for my portfolio, my PIIverse passive income portfolio, and that is my master portfolio spreadsheet. It's something that I've been using for well over 3 years, and I did one. Ironically, the first video I ever made was the walkthrough of this spreadsheet that we're going to go through again today. So again, for anybody who wants to see it, it's changed since then, but I'm going to put a link right here, right now. Oops, right up there. That basically, if anyone wants to see my first ever video that made on my YouTube channel back on July 16th of last year, it was to do a complete detailed dive of my master spreadsheet. So I haven't really talked about it since then. I use it every once in a while for videos when I'm making reinvestment or rebalancing decisions. You'll see this spreadsheet show up in my videos at times, or I'll talk about it briefly, or you'll see little snippets of it. But I haven't really gone through it since that first ever video, and that was like over 50 something videos ago. So now that it's 2026, as I said in the intro, I thought it was time that I actually do an updated walkthrough of my portfolio. So, or of my portfolio spreadsheet. It's had some, again, it's always it's always evolving, always being improved upon. I'm always catching little mistakes here and there, but it has had some major improvements on it since then. And we're going to talk about those. But I also wanted to show, you can see my spreadsheet, but you'll also see the metrics of the holdings that I currently hold. So the spreadsheet that I'm going to go through, this version is as of yesterday, updated as of yesterday with all the transactions I made. Yesterday was a big dividend day. Over $12,000 in dividends came in yesterday. So that was huge number. 24 of my 35 cover call ETFs paid out yesterday. So that is a lot of work. My spreadsheet is the spreadsheet, or it's the source where all the details of all distributions for all 7 of my accounts, or 6 of my accounts that hold cover call ETFs, actually get that data coming in from my broker, and I have to manually transpose it into my spreadsheet. So it's a pretty bad, tough, ugly day when I have to do that many. But anyways, I digress. So this spreadsheet is after all of the distributions that went in. I'll say, well, it was 24, about 20 times 5. So it was over 100 distributions that came in yesterday. Plus, I also did yet another transaction. I sold more of my Athabasca because Athabasca hit yet another all-time high yesterday. And I sold it at 850, and it actually ran all the way up into, I think, 860. So I actually, if I would have waited about an hour later, I would get another 10 cents on that stock. But anyways, I digress again. So let's get started. The first thing I want to do is call out the disclaimer that you see right there, right there. I am not a certified investment or tax expert. I'm just a retail investor sharing my journey and my experiences along the way. The content and opinions expressed in this video are for education and entertainment only. Please do your own research and consider an expert advice before making any investment decisions. Again, investing is a personal thing. You see a lot on the YouTube videos and lots on YouTube and social media. You need to take all of it with a grain of salt. You can listen to it and analyze it, but do your own critical thinking. I am no right or no wrong than anybody else. I could likely be wrong more times than I'm right. You should never trust me. You should take what I say, as well as anybody other YouTube videos, YouTubers are out there, or anybody on social media, and make your own decisions based on your goals and your needs and your strategy. So there's that. That's my disclaimer. And let's move on. So what I want to do, for those of people that are new to my channel, have never seen this spreadsheet, this is, I call my PIIverse portfolio spreadsheet. As I said in the hook, I started building this thing as a very simple little Excel spreadsheet back in early 2023 when I was just starting my journey in passive income investing, and I didn't actually look into any kind of sites like a Snowball or Passive or Yahoo Finance or anything like that. I started because I really am an Excel nerd. I decided I wanted to track my own spreadsheet, have my own spreadsheet to track my investments to meet what goals and metrics I wanted. So I started building this little spreadsheet way back in early 2023. And as you'll see, for those that haven't seen this before, it's grown into a monster. It's the monster that everyone has fallen in love with. Every time I show it, people are like, can you sell it to me? I think I would have made more money selling copies of this spreadsheet than actually my investment income, because it's crazy how many people want a copy of it. So to cut people off at the knees before they go on to my comments and say, can you please share it with your PIIverse Pillar members? Because remember, my Pillar members have access to my Google Drive and my spreadsheets. This is one spreadsheet I do not share. And I don't share it. It's not that I don't share it because I'm greedy or trying to hold on to it as a crown jewel. I don't share it because when you see how complex it is, it takes an extreme amount of care and feeding, a lot of management, a lot of institutional knowledge to know how to make it work. If I actually gave this a template of this out, even if I blanked it out and made it like generic, I would be getting more calls on a daily basis from those that got a copy of it. Even though they say they wouldn't, they'll just say, but this doesn't make sense. I don't understand how this is broken now. I don't want to deal with it. I'm not here to be a call center for software. So I will not share this spreadsheet if anybody's asking. But I have no problem showing it so that if it inspires other Excel nerds to say, hey, I can do that. If this demonstration and this walkthrough helps you create your own spreadsheet, that's great for you. For those that don't know Excel or Google Sheets, whatever, you don't need a spreadsheet to track your portfolio. There are awesome websites that are very mature, a lot more accurate because they're done by a team of analysts and specialists. So things like Snowball Analytics, which I also use very much. I'm an affiliate of it. If you're interested in it, take a look at it. But there's also Passive. I use Yahoo Finance. I know Blossom has its own portfolio tracker. There are so many portfolio tracking software out there. Please, you don't need a spreadsheet in order to track your portfolio. It's nice to, if you can, but you don't need it. You look into some of the several different portfolio tracking software tools that are out there and save yourself a lot of hassle, because unless you love Excel, it is a lot of work. So But anyways, it's a godsend for me. And I now use it for all my decisions. I use it for whenever I do reinvesting, whenever I do rebalancing, if I'm going to be making any strategic moves or strategy considerations or analyze things, say how things are going. This is the spreadsheet that I will use more so than even my Snowball Analytics, which gives me some really good graphical metrics and stuff like that. But this is the one that tells me down to the dollar what I'm doing, because this spreadsheet actually tracks every dollar I receive in cash flow as well. So and again, when I say that, doesn't mean that Snowball Analytics doesn't do it, but I do it because when I get the dollar actually received into my account, that is net after the 15% withholding tax, if there's any commission fees, all it. So this is the actual dollar that actually lands in my bank account or in my brokerage account, and that's why this one is by far the more accurate. Snowball is pretty accurate too, because it basically does what it knows it should be for, distribution, and it's U.S. currency, whatever. But a lot of times it's not aware of the actual commission fees and stuff like that unless I tell it to. So anyways. So this one is very accurate. They stay pretty close aligned. I always use my Yahoo, my Snowball Analytics, and my spreadsheet all the time to sort of see if they're all generally in alignment. They're never down to the same dollar, everyone. Like one will say that my portfolio's NAV is at 1.53 million, and another one will say it's at 1.536 million. They'll be out by a little bit because each is a little bit of nuance on there. But as long as they're relatively close, that's good enough for my strategy. Okay, so that is what my Excel PIIverse portfolio spreadsheets history is. I constantly am making changes to it, as I already said. The most recent major change I made on it, and I'll show you when we go through the spreadsheet, is my introduction and inclusion of now my 3 pillars of income investing: anchors, boosters, and juicers. My spreadsheet now, as well as my Snowball Analytics, but my spreadsheet is also now tracking my 3 pillars of income investing. And so that's become very valuable for me because I actually am using these pillars quite a lot now as a major guidance rail, or guidance for me to know which new ETFs to buy, or how much more should I wait into one versus the other. It's become a very important part of my strategy, and therefore having my spreadsheet track it is very valuable too. Okay, so let's go into it. I'm going to show you, first of all, the spreadsheet and the tabs, but we're going to then work on one tab in particular, but we'll talk about it. So let's switch over there right now. Okay, let me zoom this up a little bit. Okay, so this is a very big spreadsheet. So before people that are on their phone say, Perry, this is way too small, I can't see it. Apologies, I can't help it. This spreadsheet is large. It's very complex. I have 38 investment holdings, 35 of them being ETFs and 3 of them being stocks. So when you do that with all these metrics, there's no way I can make it look any more simple. I strongly advise you watch it on a laptop, or watch it on your 40 or 60 or 80-inch TV. It'll be much easier to see. Trying to watch this on your phone is not going to be that easy. So I apologize in advance, but I've tried to make this as big as I can, and hopefully you bear with me. Okay, so let me move things over. So what I'm going to show you here is this. My spreadsheet basically is actually made up of several tabs, and I just want to explain quickly what each tab is. So if you look down here, and I just want to make sure that I'm seeing what I'm seeing. I apologize here, people. Yes, I see it. Okay, so if you look down here, you see all these tabs down here. Let me explain them, because each tab is very important. The first tab here is called the ETF Meta Tab. The way my portfolio works is that I have, and I've explained it in other videos, when my portfolio strategy is that when I decide I'm going to get into a new ETF, let's say like recently I just started getting into C-Day, which is right over here. I'm just going to highlight it right there. Let's see right here, C day. So whenever I do some analysis and research and I decide, you know what, I want to start investing in C day, all of my portfolio will then have the ability to, and when I say my portfolio is made up of several accounts. I have 6 registered, tax sheltered registered accounts, and I have 1 non-registered account. So that is 6 plus 1, that's 7 accounts. So when I decide that something like C-Day is going to be a new ETF for me to follow, it goes into this tab here called the ETF Meta Tab. This is the tab in my spreadsheet that tracks all the details about the ETF or about the stock. It doesn't care how many shares I'm holding. This is the one that actually shows the metrics or the metadata for that stock. In other words, this is the input from Excel with regards to what its title is, what is its symbol, that it's Canadian, what its current price is, which my Excel spreadsheet updates every 5 minutes when the markets are open. So this one is the one that it comes from here. I don't use this anymore. This was NAV. When I set weights for my entire portfolio, I set it here. So for example, I've said that C-Day will now make up 6% of my portfolio. So when I put 6% here, all my other tabs are going to honor it and say, oh, Perry says that C-Day should have a 6% weighting, a holding weight. So the other tabs in my spreadsheet will honor this. This is the one that does it. This one actually also receives data back from the other accounts in the portfolio and says, and by the way, you set 6, you're currently running at 5.1. So this comes back to the meta side and says, hey, here's where we're at here. This tells me, regardless of which of my accounts holds how many shares, this tells me my last distribution that was received. It gives me the date, like this one happens semi-monthly. This one happened on January 23rd. This tells me my current yields, 6 months average and latest. This gives me metrics. So these are all metrics with regards to the ETF itself, regardless of the portfolio's actual holdings. So this is a thing I've created this. I do a lot of these like cool metrics that are interesting to know. This one here says, if I had $1,000 in an ETF, how many units would that buy? What would be the per $1,000? What's the per month distribution and the per annual distribution? So in this case here, I got to figure this one out here. I have to figure this one out. Times 12, 13. Yeah. So for every $1,000, it says you get 166. So, okay. And so this gives you the other metrics of it. Some of the stuff I don't track anymore, but it gives you more details of it. And it then also gives me, this is the one that tracks my distributions for the 6-month period. So this is the last 6 months period for every ETF. So every time that an ETF manager declares a distribution, that distribution gets put in here. So that I can track and create a 6-month trend of my of the distributions, and then this one gives me the 6-month trend of the prices on a week-to-week basis. So the reason I do that is so that I can actually get a chart to show the history, the 6-month trend of each ETF's price. So this is showing it here, and these are the ones here. These charts are then used in all my other tabs so that I can have a good analysis. But the ETF Meta tab is the one that sort of feeds all the critical metrics of the ETF into my other tabs. Okay. I'm not going to talk too much about the executive summary. I use this very rarely, but I use this to know how my finances are going. Basically, how much income's coming in, what's my current price and stuff like that. What are my margins? What's my yield and stuff like that. How much income is coming on average. I don't use it too much, but I did do this. This shows me on taxes, how much taxes are happening, stuff like that. So I don't use this one often, but this is one I use every once in a while. This one was used quite often in 2025. This is my charts tab. It gets all the data from all the other tabs and comes and builds up charts. It shows me like my portfolio yield, how much my projected 12-month income is for each one of my accounts, because remember I had 6 accounts. It gives you my monthly withdrawal that's happening from each of my accounts. It gives me my numbers. A lot of this stuff here, it gives me my holding weights. Now, a lot of this stuff here, I don't use this charts tab anymore, almost at all anymore, because Snowball Analytics now provides pretty much all this data. Not all of it, but almost all of it, and then some of it that mine doesn't even do. So I actually rely on Snowball Analytics to provide this data much more now. It has better, more dynamic charts. So this one is sort of fallen by the wayside now that I use Snowball Analytics for my portfolio analytics. I should actually call this analytics charts more so than anything. But this chart is sort of historical. I don't use it anymore. Okay, the next one is what I call the portfolio chart. It's the one we're going to go through for most of this video. But the portfolio chart, or the portfolio tab, is an aggregation of all the other account tabs that are actually doing their own thing. So this is not an actual account. This is an aggregation of all my accounts feeding into one, so that I have a whole 100,000 foot view of saying what's going on in my entire portfolio. And again, my portfolio is very complex. I'm going to go, so you're going to see down here my portfolio tab. You're going to now see my RIF, my wife's RIFs, my LIF, my prescribed RIF, my non-registered, my TFSA, and my wife's TFSA. So all of these accounts, except for, well, even non-reg, all of these accounts run on their own. They all are managed independently. So whenever I have a distribution, if this is my RIF and I have distributions that are coming in, it's these tabs that are actually recording all those distributions. And then all the metrics that are in here get fed up to my portfolio. So they'll look very much like my portfolio tab. You can see this is my portfolio tab. And you can see this is my my RIF tab and my wife's SRIF tab. So this one basically tracks everything happening on this account. So even though, for example, I'll give you an example here, INTI. INTI is something that my catalog of covered call ETFs allows me to buy in each one of my accounts. But in the case of my RRSP, my personal RRSP or RIF, it does not have any. So it says, yeah, there it is. It's a line item, but Perry hasn't bought anything for this RIF. But if I go and look at, say, my LIF, you will see that INTI does actually have shares. So this tracks for every account. It tracks every holding, how many shares each of my accounts hold of one of these ETFs. So this one has 250. If I go to something else like, say, my PIIverse will have its own. So my PIIverse says that I haven't invested in INTI yet. And, you just keep on looking through here. Here shows that my TFSA has invested 500 shares into it. So it's tracking every one of them by an account level. Okay. Now, this is basically then, like I said, this gives me my metrics on a per account level. But then when I want to actually see the holistic one, all of that's fed up to here. So when I look at my INTI, you will see that my INTI says that Perry across all my accounts holds 1,350 units of INTI. And that's because it's had it from all my accounts aggregated up, says that in total over all your accounts, you hold 1,350. This gives you my average cost. What's my cost based on all of mine? What's my current cost, book value across all six of my accounts? It tells me what the current value is, what's the current value, the current NAV of it. This gives me all those metrics at the portfolio level. Okay, so, and then my last one here, and I've actually extracted this one. I'm going to show this because it's actually in this spreadsheet, but I have actually, for my PIIverse Pillar members, people have asked me, Perry, if I want to do a rebalance and I want to try to do something myself, I seen you had a spreadsheet where you can just plug in numbers and it will do it for you. So this is my spreadsheet here. I've created an independent spreadsheet. It is actually available as a template for any of my PIIverse Pillar members. They can get access to this. It's all manual, so mine is integrated into my Meta, so that makes it easier for me. But if anybody wants this spreadsheet and wants to try to do their own version of this rebalancer or portfolio builder spreadsheet, it's available for my Pillar members on the Google Drive. So for example, what this means here is if, for example, I got inherited, say, $100,000, and I don't know what to buy to build my passive income portfolio. Well, I can just say, here's $100,000. And it turns around and says, well, Perry, based on what you said the set target weights are for every one of them here, it will calculate how many shares I have to buy. It'll tell you how, it'll say, based on my portfolio, you'll have a 63.7% target weight or yield. It will say how many shares you need to buy. If you have current, it will say, well, your target is 80. You currently have 60. You need to buy 20 more to make it match this $100,000. And so this is what this spreadsheet was created for, to make it easier for me to build and manage my daughters and my portfolio. Again, I digress. It's available for Pillar members if they want it off the Google Drive. Okay, so that's my structure. And like I said, if you look at what I've just showed you compared to 2023 when I first built this, and it was one little tab and about 10 columns and about 8 or 10 rows, it's definitely grown beyond here. And this is why I don't share this, because this is so complex. It's so integrated with each other. Adding a new portfolio, a new holding here is an extremely lot of work, because I have to then insert a row here. I have to insert a row here. I have to insert a row on all of these and then fill them up. So just adding a new ETF into this spreadsheet is a lot of work. I actually dread doing it. So I better, if I add a cover call ETF into my spreadsheet, I have to be serious I'm doing it, because I know it's a lot of work to add it to my spreadsheet. So, okay. So enough of that. Now let's go through the next part. And so I'm going to show you how this works. This is updated again as of yesterday. So this is fully up to date. Just to show you on the very side here, these three are my three growth stocks. So you can see it says stock, stock, stock. So these are growth stocks because I have a hybrid portfolio. About 15% of my portfolio is growth, and the remaining 85% is income, because I'm a retiree and my portfolio's job is to pay me so I can live on my retirement successfully for years and years and decades to come. So anyways, so these are my three stocks. It tracks them here. Anything related to income, you can see is grayed out because, of course, my growth stocks don't generate any income. But all the others are my passive income cover call ETFs. Now, just to help you guys figure this out a little bit more so it makes more sense, in order to keep things a little simple, everything from here down to ENCL are Canadian ones. You can actually see they're Canadian because over here, everything here is Canadian. If it actually has a price on it, it's not Canadian, it's American. So everyone here from QDTE all the way to the bottom, these are American cover call ETFs. So my US price, this is my cost price, and it says because I track everything and translate everything into Canadian dollars, I'm a Canadian investor, so everything that comes in American, my spreadsheet auto converts into Canadian pricing. So for example, if QDTE's current price or book cost is $41.43, based on the current exchange rate, my Canadian cost is $56.68. This also happens over here. If it's Canadian, it tells you what the Canadian price is. So my ENCL as of end of yesterday was $19.72. And because it's Canadian and native, it just says CAD. But if it's something like QDTE, it basically puts the native American price here at $30.12, and then it goes over to my Meta tab and says what's the current exchange rate, and it says based on the current exchange rate, your current NAV price for QDTE is $41.20. That is the current market price, not NAV, market price. Okay, so that just wanted to give you that. These are my Canadian holdings, and these are my American holdings. Okay. And that's the way it works. And then down there, we got cash balance. It keeps the track of everything down here at a metric level for the entire portfolio. So let's first go through. I'm just going to actually use these two because you could actually, I can see ENCL and QDT. That's my Canadian and my American. But we'll go through some of these here. If it doesn't have any shares here, you'll see a div 0. It's an error because I currently, out of all my portfolios, I do not yet have an S-Day holding, and I currently do not have a TDAX holding. I was thinking of actually putting them in, and I'm thinking of investing in them. I haven't yet decided to do that, but I've already added them in here. So these two are actually not actual holdings right now. That means none of my accounts actually holds TDAX or S-Day, but they may, and when they do, I'll be ready to add them. As soon as one account adds them, they'll start showing up here. Okay. Everything else is actually, so what you'll see is the number of shares, the stock or the ETF name, what manager, if it came from Hamilton, how many units I have across all my accounts, how many months I've held it. So you could see, for example, my HYLD and my HDIV, I've held them now for 3 years. It was 3 years ago this month that I started my passive income journey, and HYLD and HDIV were the first two, as well as HMAX, to actually join my passive income journey. And so these guys are as old gets. The other one is my Athabasca stock, which I also started investing in late January, early February as well. So these are my 3 oldest dogs. And then everything else here tells you how many months. So C-Day, I just started last month, so its number is 1. Some of them are a year, so you can see what that is here. These are just special notes. If there's something I need to know, I put my notes in here. The first one here is my book cost. So you can see here, this is the cost of my investment. So across all of my accounts. So for example, with ENCL, my current book cost across all my accounts is $19.54. If I'm in a specific portfolio account, obviously it'll be different. So if I go over here on ENCL, and say here, you can see that ENCL for this account is actually $19.61. So it all depends on this. But for across all 6 of my accounts, my average cost for my entire portfolio for ENCL is $19.54. And for QDTE, which is an American one, it's $41.43 or $56.68. Then the next metrics here are all related to current price and all the metrics that relate to current price. So this is my current price, current NAV, everything current. So everything you see here, the first one here shows you compared to book, where is it sitting? So if you look at ENCL, I am currently up 0.9. If you look at QDTE, I'm down 27.3%. It tells you what my plus minus is. I'm down $1,100 versus the book. And here, or sorry, I'm up $1,100 versus book, and I'm down $9,000 versus book. This column here I use for trimming gains. So this is a more recent column I've added. So if there's if there is an ETF that has actually kept on growing in NAV over and over and over and over, and it's got to a point where I actually might want to consider trimming some of its gains, a good example here is my bank. You can see my bank ETF. It's been a rock star ever since. Call has been another rock star. The two of them have been rock stars here. So my bank, for example, says that you are up $22,000 since its cost price, and you're up 33%. If you want to trim all your gains, in order to trim all your gains out of your 9,410 units, you would have to sell 2,385 of them to actually trim the $22,000 in gains. That's what it is. So sometimes when I do a rebalancing and I say, you know what, bank has been doing really good. I want to capitalize those gains. I'm going to sell those 2,385 units. It'll generate me $22,900, and I can then use that money to buy into something else. So that's what this trim gains is. It helps me say if I want to trim down bank, I could trim it down by its total gains, and that's what I could use. So here it would say I would want to sell 2,385 if I wanted to do that. Doesn't mean I will do it. These numbers here, by the way, before I jump into this is the actual current price. So this one says its last price is $9.62. Tells you that it's a Canadian. It tells you what my current market value for it is $90,000 versus I bought it in at $67,000. That's why it's 33.9% gain. This tells you what my volatility percentage is. These are arbitrary metrics that helps me get a better understanding on how they're doing health-wise with regards to growth. So, of course, obviously, anything that's, first of all my American ones, anything that has, the deeper the number is away from 0 or below 0, the worse it gets. This one basically says that the 6 month, over 6 months, it has 100%, 92%. It's not doing good. This is my 6 month volatility number. This is basically showing my volatility over the last 6 months. This is not a positive negative. It's just showing you how volatile the stock is over the times. 1%, this one here means it has, because it hasn't moved much because I've only had it for a couple days. But for example, you'll see a lot of the numbers are actually quite low. For example, let's use C-Day. C-Day says for the last 6 months, its 6 month volatility was only 8%. It means it's only moved up and down from beginning to end. So from the little red mark to the little green mark, it's only moved around about 8%. It's showing volatility, not beginning to end. So for example, let's use another one. Here is COIW. It's showing that over the last 6 months, it's had a 72% volatility, meaning from its very high to its very low, it's had a volatility of 72% swinging. This means it's very volatile, right? Doesn't mean if it's positive or negative. In this case, it's negative, but 72% means its volatility is very, very wild swinging. If it has a low number, like for example, this one here, Canny has a very low volatility, means it's a very stable ETF. Its price doesn't fluctuate that much. And again, these are my health metrics. Most of the numbers, again, it's an arbitrary formula. It's a very complex formula, so I won't even explain how it works. It aggregates a whole bunch of things together to give me a feeling. I don't use this that much, but it's a neat little metric I use to know how things are doing really good. The higher the number, the better. HDIV obviously is a big winner. HYLD is a huge winner. It's 59% and 15%. They're doing really good. You can see Utes is doing actually really good based on its metrics, and Bank is doing pretty good as well. So, okay. All right, so that is everything showing me my price, my book cost, and my current price. Now we're going to move over. I'm going to slide her on over here. Okay, I'm going to keep some of this current price. This is all my income metrics. So this is showing me my cost per share or my cash flow. This is showing my cash flow and my yield metrics. I use this all the time. Okay. Again, I showed you this 6 month erosion thing. This one here is my health metrics. It's a weird one. Again, it's very complex. You can actually look up here how complex it is. It is a very complex metric to do. I won't explain it, but I've got it up here. There. It is not black and white, does not use blending of both. Yeah, so this one is a very complex thing. I don't want to explain how it actually works, but I use it just to give me another thumbnail of how healthy something is versus not healthy and stuff like that. Of course, the lower it is, like 401%, that's very bad. If it's something like 200%, that's very good. It means HDIV is just rocking it. It adds a whole bunch of things like income and NAV appreciation, and it comes up with a number, an arbitrary number. It's got no relevance to anything. So other than it's an arbitrary number across my portfolio. Okay, so let's get back to this one. This tells me, again, from the Meta tab, it gives me what the current month's distributions were. When it comes to weeklies, it actually uses the previous month, because when you're a weekly, the current month is actually a week by week by week basis, so it really can't give you this month. So whenever something is a weekly or a semi-monthly, it's always using the previous month as its current month. So a lot of these, like COIW, that was its previous month's total distributions. It also then shows for every one of my ETFs how they're trending over the last 6 months. So for example, this is what you'll find, again, when we talk about anchors versus boosters. A lot of my Canadian ETFs are extremely stable with distribution. So let me give you an example. ENCL, one of my old dog rock stars. I'll never sell out of my ENCL. This guy is a rock star for me. Look at his distributions. It's flat. It means I paid 26, 26, 26, 26. It's boring because every month it pays the same number. Another one is here It's Biggie. It's been paying steady. This has been paying steady. Here's when it's actually gotten better. Bank has actually improved. You're looking over here also at Hamilton's HDIV and H yield. They've both improved. So this gives me a trend of something that's doing good. Down here, it shows you a lot of the American ones, which have a lot of juicers and boosters in them. And you can see down here, you can see that it's a lot more wild swinging. There's no flat lines on almost any of the US covered call ETFs. You can see here that they're jumping all over the place. The number you see in this graph is the 6-month trended average, whereas here you're saying this is the current or latest one. This is the average over 6 months and the 6-month trend. Okay, this then converts to say, well, what is that over annually? Projected annually, meaning the current times 12. That's really all it means. So this says that how much is this covered call ETF planning to pay out? Projected based on its last. It doesn't mean anything. In this case, it does, because call, for example, go to call. Call is extremely flat, so it pays out $1.50 a year. Chances are that's what it will do, because look how flat it is. It always does that. But to say that this one down here is going to pay, IWMY is going to pay $9.60 over the next 12 months, chances are it's not, because you can see how it swings a lot, but it says it's this times 12, so it's just a projection. Okay, the next three here are very important to me. These are my yield metrics for any of my covered call ETFs. So the first one is my 6-month average. So it uses my 6-month average and says over the last 6 months, this is what its yield is. So let's use, I don't know, let's use bank for example. So bank, it says that my 6-month yield is 14.1%. That's the average over 6 months. It then tells me what my yield is currently for my portfolio for the current month or the previous month, whatever the latest month is. So it says right now my yield 6-month average for bank is 14.1. My last month it was 15%. My yield on cost on bank is 20.1%. So he's doing really good. Yield on cost basically means if it's higher than the average or higher than current, it means that basically your covered call ETF's price has increased in value, and therefore you're increasing your yield. Your yield actually goes up. On the other hand, if something goes down, like for example, let's use Alti, for example, everyone's favorite dog. It says that the 6-month average for Alti is 115%. It says based on its latest one, it's 84.3%. But it says that because my Alti has dropped in price so badly, it's basically saying that my yield on cost on Alti is only 47.7. So effectively, my yield for my investment on Alti is only at 47%. But if you were to buy it today or whatever, as of the last month, your yield would have been 84%. Over the last 6 months, it's 115%. But that's because it's actually getting 5 months of higher yields blended down as it's going down in price. You can see here. So its average is there. If it's got red here, it means it's below the 6-month average. This guy's below the 6-month average. This is below the 6-month average. If it's green, it means that you are above the 6-month average. You want to see green. That's nice to see. So there's your green. Okay, so these metrics, I use these quite often if I'm deciding to do rebalancing. And I'm deciding, you know what, like when I did my QDTE sell down and I ended up buying something else, I decided, well, how does QDTE compare to QQQY? So because QQQY and QDTE are like competitors, neck and neck. So this tells me where I'm standing with regards to this one and this one. So you can see there, it says that the average 6-month yield for QDTE is 58% and IWMY is 42%. It's saying that its current is at 90. This is actually a bogus number because December, which it captured December, it basically went up so high because of those end of year distributions. So these numbers are actually quite skewed because of QDTE paying out those 2 massive distributions at the end of December. So I can't really trust those numbers anymore. You have to sort of use the data you get and then turn around and realize that there are other metrics that may make some of this invalid. And that this one really skewed these numbers when they did those two massive payouts in the end of December. But anyways, I use these metrics all the time. Okay. From this data is actually calculated. So this is telling me all my cost per share type of thing. Cost per share, average per share, current per share, hell, everything's per share. This one tells me for my portfolio what is actual numbers with regards to income projections. And again, it's projections, meaning it's not actual. It's as of the last one and looking forward. So it's saying right now, based on average, let's use bank as an example. It says on average, based on how many shares you have across all your accounts, you're generating $1,066 a month from from your bank covered call ETF. Based on the current, it's now 1129. So when you see green, it means that bank has increased its distributions. And then because it's increased the distributions, that's higher than its average. So this is my current, and this is my average, and this is my annual. So this is basically average times 12. So this is basically say, if you hold bank and you follow the 6-month average, bank over the next 12 months will project to pay you out $12,700. Okay, so this does it for every one of them. It tells me my average, it tells me my current, and it tells me my annual on average. I use this quite often as well. When I'm doing rebalancing, for example, I did a major rebalancing just a couple of days ago or a few days ago. I sold out all my HPYT, which was a major holding of mine. I sold all of them out. And I made decisions. I said, okay, if I'm going to sell out HPYT, where am I going to move it? So when I was looking at HPYT, which is no longer in here, it's been removed because it's now been a closed position, so it doesn't exist. It actually was this row here. I compared its numbers to that of the ones that I wanted to get. And I noticed that, for example, I wanted to move something that was Canadian. I wanted something to be an anchor. I wanted to be more stable. So in this case, I decided that I'd move pretty much all my HPYT holdings over to C-Day. So that is a move that I made just a few days ago, actually a couple days ago. And so I use these metrics here as major inputs on my rebalancing. That was a rebalancing move. And my analytics, my spreadsheet helped me determine what I was going to do with regards to the rebalance. Okay, so I tell you that this spreadsheet is the most critical thing when I'm doing rebalancing and reinvesting. That's what I'm trying to say. If I, for example, decided I wanted to, trim down some of my ENCL and actually move it to something else, I'd be looking at these metrics here. What is my current cost on yield? What is my current yield right now? And if I'm going to move it, do I want to move it to somebody that's lower because it's more stable? Do I want to move it to something more higher so that I can generate more income? That's what this is used for. I use these metrics here. And then I usually then do projections out and saying, if I bought C-Day, for example, and I sold out HPYT, how much would I get in C-Day on a monthly and current versus if I did HPYT? Okay, so that's this. Then we move further over to here. I'm going to move all the way over. I'm just going to go to income projections. So then I'm going here, which is my years to full cost recovery. I put this in about a year and a half ago. I like it. It tells me basically how many months am I away from actually having my cost being fully recovered. So if a number basically, like if I buy something and it costs $10,000, when did I receive $10,000 worth of distributions that basically brought me to what I refer to as house money? When did I get all my money back of my investments from basically distributions paid back to me? A good example of that one right now is QDTE. I won't use this. Actually, I can't use this one because it's looking really good because I sold a lot of QDT. So that's not a fair one. But let's use one that really shocks people. I'm going to use MSTY, which everyone knows MSTY is really down in the dogs. Just to show you how bad it is, let me go over here again. I'm going to show you that my MSTY, I am down on MSTY since my book cost down to what it currently is worth. I have invested $83,000 in it. It's currently only worth $12,000. So basically my MSTY holding is down 85%. But if I go over to here, it basically says I have already paid back. Basically, I'm just about at basically house money, meaning that, yeah, okay, I've lost all that money, but basically I've already recouped all my investments back as distributions. So this one is telling me that, I'm just showing here. Yeah, so it's basically saying that I'm 97% recovered. It means I'm almost recovered all my money out of this one. I'm 3% away. It's hard to reach house money because you basically, if you are actually investing more money into it, you're like, okay, I'm at 97%. But if I went and bought like another 100 shares of MSTY, then my 97 would then go down to about 92 because basically now I have to recoup that investment back in. So it's always hard to reach a house. When I sold Coney, I did reach house money. So it was one of the rare dogs that I actually did reach house money. So I don't use this too often, but it is a cool metric for me to know how close I am to having my investment repaid back. Okay, I'm doing this one next because this is one of my new ones. This is the one that's really exciting for me. I added this in here and it's called my portfolio pillars. This is my 3 pillars of income investing. My portfolio, my spreadsheet now tracks every one of my cover call ETFs and my stocks and says, what category is he? Is he a stock? Is he an anchor? Is he a booster or is he a juicer? And that's very important. There's a video and I'm going to look up here right now. There's a video. If you want to see the video on how the 3 pillars of income investing work, just look up there and you can get all the details. But my spreadsheet now tracks all my portfolio ETFs based on what category they are. So for example, almost all the Canadian ones are anchors. There are a few juicers and a booster. So these are anchors because they all follow the category qualifications or criteria for it. What this number here says, it's the percentage within the category. The reason I track that is because my Snowball Analytics has a metric that says, tell me what percent this stock is amongst anchors. And that's a hard thing to calculate. So I've made my spreadsheet do that. So now my spreadsheet can turn around and say, oh, okay, Snowball Analytics, here's your number. Your C day basically makes up 13% of all your anchors. And that goes into my Snowball Analytics. Okay. Anyways, this tracks it all here. Now, what's so important about that is now that I have these categories identified, I can now use Excel to do extrapolations and say, how is my portfolio being structured based on that? So for example, this whole section here was also added as part of this new feature. And so I can now say that, oh, okay, so based on you have 3 stocks, 10 anchors, 10 boosters, 15 juicers, a total of 38 positions, plus you have cash that makes up 6% of your entire portfolio. It tells you what percentage is each one of these categories as part of your portfolio. So here it says that anchors makes up 35% of my current NAV, boosters is 23, juicers is 23. This tells me how much does each of my categories make up as monthly income. This is where it's a big thing. Anchors make up 21% of all my income, boosters 27, and the juicers, again, that's why I have juicers. The juicers make up 50% of all my monthly income, even though they only make up 23% of my entire NAV. This tells me my income on a 6-month average. So this is telling me how much income they actually generate. So based on a 6-month average, it makes me 14,000. Based on latest, it's 7. Excuse me. This one here is telling me that it's 13,000 on boosters and 28.18. This has definitely dropped because the juicers have definitely dropped on their monthly distributions versus 6-month average. And then this tells me my current versus book NAV for each one of them. So here you can see that my anchors are basically at current NAV is 541,000. My book was only 496, so I'm back actually up 9% on my anchors. That makes sense because anchors do appreciate and stabilize the NAV, so that's why I'm actually up. And you can see that my juicers, for example, are the exact opposite. I basically, my current NAV is 344, even though my book NAV was 696, 698. So I'm down 50% on NAV with regards to my juicers. And then in total, it tells me for total, I'm down 23%, which that makes sense. Okay, so that's my new feature that was just added into my spreadsheet. This is all my holding weights. Now I have holding weights based on 2 different categories. This is my holding weights, which actually includes my stocks. And this is my holding weights, which excludes my stocks. Because a lot of times, because I'm really more focused on income, I want to know more what percentage of my cover call ETFs that generate income, what's their target and what's their actual. And then what I do after that, say, okay, now throw in the 3 growth stocks that make no income and show me what my portfolio makeup is with them. So this is with stocks. These are without stocks. With stocks, without stocks. So this tells me on a given basis, for example, if I want to use all stocks, if it shows here, it says that I have set the target, and this target actually over here, this target comes from my Meta tab that says Perry said that my CYNE should be at 2% of my portfolio. You're currently only at 0.7, so I'm way underweight on my portfolio here. This then extrapolates it to include the stock, saying that Perry's target when you include stocks is 1.7%, and you're only at 0.6%. He is a juicer. So what he's saying right now is if you want the portfolio to actually get up to its target weight, Perry, you would have to buy 3,298 units of CNYE in order to get it back up to its current target weight of 2%. It's basically saying it's down 186% from what you want as a target. So this gives me my targets. When I do reinvesting, I'm always looking at this one to say, if I see something that's blue, it's one that says I'm underweight on it and it's something I should consider reinvesting in. It doesn't mean I'm going to invest in any one. It just means these are the ones you should be looking at because they are underweight. So for example, I am at 6 and for example, C-Day is at 5.1. If it's something I already wanted, I actually like C-Day and I want to actually build up on it. It's saying, okay, Perry, if you're going to reinvest and you want to get up to target, you're going to have to buy 464 more units across one of your accounts in order for you to get up to your target weight. I use this quite often. This is telling me my dividend weight, and basically dividend weight, it basically shows how much of the portfolio is dividend. So how much of this for HYLD, it's hard to say this thing. So for HYLD, it's basically saying that HYLD's dividends make up 0.5% of the distributions that are paid out. If it's something like here where it says 11%, it's saying that HOOY, H-O-O-Y, the distribution it generates makes up 11% of your entire monthly distributions. This guy is sort of like holding the heavy weights. You can see here, he says these guys doing 6.1%. So these guys are bringing in the most amount of money. This one here says dividend versus holding weight. What this says is how effective is it on how much you're paying to invest in this versus how much income it's generating. And this one's saying that here, if you see 371%, it means that he only makes up like 3% of the portfolio, but he's generating 11% of the actual distribution. This means he's carrying more than his weight in portfolio distribution. Versus income distribution. When you see something like 29%, it means you're spending a lot of money and it's only making 29%. It has a ratio of 29%. Again, this is what happens when you buy stable, lower yielding cover call ETFs. It's basically compared to the big dogs like the juicers. These guys are going to not carry their weight because you're spending a lot of money and generating a lot less income from that investment. These guys, yeah, they're volatile. Yeah, they erode in many cases. But these guys, for every dollar you put into this one, you're getting $3.50 worth of value from it. Okay. And then the rest of it, I'm not going to get into too much detail. This is basically an aggregation of all the money coming in from all my accounts on a monthly basis. So this is actual dollars coming in for each one of them. You could see, for example, Hui last month brought in $2,975. It says right now it's 405, and the reason it's 405 is because it's a weekly payer, and this one builds up over the month, and there's only been 1 month paid, and that comes from here. So this one here, every week that something's paid, I use people like Andy from Blossom to give me my declarations here. Whenever there's a distribution declared, it gets added here. So here's for example, Blocks would be paying on Monday. Its next one is going to be 11:40. When my bank broker basically actually receives the cash, I actually enter that money, but I don't enter it here. I enter it on my accounts. So this is the weekly buildups, and this keeps getting larger and larger over the next 4 weeks. So this 405 will likely become 810, and then the next one will be about 1200. So this one builds up. This is after all 4 or 5 weeks were paid for that month. Okay. And then this basically shows you what my metrics are. So for example, and some of these are not actual rights because, for example, QDTE says I have a 70% total ROI. Well, that's not really true because I sold a lot of stock. So the income generated was still 34,000, but I sold like 3/4 of the stock. So the 34,000 is based on a lot less shares. So this number is not accurate, but this number is accurate here for Misty. Misty is currently, even though it's down 85%, I've basically earned 97% ROI. So I've generated $81,000 and I've only lost $71,000. So I'm actually up about $10,000 on Misty, even though it's down 85%. And that's why I'm not selling Misty no matter how bad it gets. I will just ride this thing. It will keep generating income on a monthly basis. You can see Misty paid out 149. It'll likely pay out 140 to 149 to 150 again and again and again. So it's still generating money. There's no use in selling it for me. This spreadsheet tells me exactly why, because basically, why would I sell this out, capitalize 85% losses, take $12,000 and then invest it in what? Because I won't be able to get the same money, the $149, if I bought it into something else. So it's just best for me to just keep it and let it ride and let it keep milking it. Okay, that's about it. I think I've explained a lot of stuff with regards to how my spreadsheet works. Again, you guys could freeze frame it if you want to freeze the different screens on it. But this is the spreadsheet that I use. I use it every day. Pretty much this is the spreadsheet I'm into every day. I hope this has been very helpful for you guys. Let me go back to myself here. Okay, here I am. Hello. So again, I hope this has been really helpful for you guys. I know it's been a long video. All my videos are long videos. But again, hope if you have any questions, please, by the way, press like. If you want to subscribe, please subscribe. I know you have some questions with regards to this. But again, I enjoy you staying with me and watching this. And until next time, stay safe, stay investing, and I will see you in the PIIverse.